Welcome back. You're still tuned into Trading Hour. It's time to talk about market fundamentals now. Christy Mathai from Quantum AMC is joining us now to discuss that. Christy, good morning. Thank you so much for joining in. Well, you know, a lot has happened in the month gone by, or in November itself. We've seen geopolitical tensions emerging. Then we had the Trump election. Then we had our own earnings, which saw big downgrades coming in as well. What's your take on the markets right now? Do you think we'll see more consolidation? And what's your take on Nifty earnings for FY25? Have you seen some, or are you looking at some more downgrades come by? What is the rest of the fiscal looking like?
Right. Thanks for having me. So I'll just start with the earnings bit. If you want to look at, how the earnings season has been, just for the last quarter, what you've seen is a fair bit of downgrades across the board, and it is more prevalent in the mid and small cap universe as it is. Now, I think there are 2-3 reasons for that. One, of course, is, last year we had a fair bit of tailwind in terms of margin pressures in the commodity pricing going down. There was a fair bit of growth, which resulted in some operating leverage, and, the margin expanded, resulting in, growth across the board. But most of those parameters are sort of absent this particular, year and this particular quarter in particular. So our sense is that would continue even going forward. Only caveat is, last year we had the festive seasons being bunched up as opposed to this particular quarter where it is more spread out. So the weakness that we saw in 2Q may not give you an accurate picture in terms of the broader economic outlook or products earning directly. So, we'll get a more color on that as we progress into the 3Q. But that aside, if we look at the valuation per se and how the stocks have, performed, so we've had close to about 6 to 7% drawdown from the peaks that we saw, about a month back. Against that, if you still see the YTD and longer term returns, YTD returns for BSE sensex is close to about 11%, and you look at the smaller and mid, it is in the vicinity of 23 to 24%. So those numbers are still pretty good if you were to look at within the context of earning downgrade that we have had. So our sense is this would be still again a period where we could see, that sort of a consolidation, and, earnings downgrade also perhaps may continue, maybe at not the degree that we have seen in, the past quarter.
So Christy, on that subject, almost 2 months of this quarter are done now. What's been the feedback from corporates about Q3?
Right. So across the board, if you were to see, because it's too short of a period to gauge, but we have seen across some of the channel checks that we have done and what we have been hearing, that demand is broadly picking up. The clear picture would emerge end of November as to, how the festival season. So far, things have been on track. There are some concerns with respect to specific segments. If you talk about the banking segment, there's the whole MFI pressure, which will not go away in a hurry, which might continue for some time because there have been more regulatory scrutiny that have been put up. So, the pain would perhaps continue for some more time before things show up. You look at autos, we have seen fair bit of inventory absorption that has happened during the festive period. Again, there are subsegments like two-wheelers which have done well. The CV part as well as, the passenger vehicles are still recovering, so the inventory has kind of come down. You move broadly to the, consumption space. Again, what we are seeing is some bit of improvement that we have witnessed in the festive period. And hopefully, the second half should be better than what we have seen in first half because they were marred by a lot of one-offs, including election, the bad monsoon period, the strong monsoon period, which caused a lot of upheaval in certain states. And, the festive periods being a bit different from last year.
Okay, so second half could be better than the first half. In that case, are you finding any pockets where you think it could be the right time to invest, or are you waiting for further correction?
Right. So as of now, the current, given where the valuations are, we are not aggressively deploying whatever cash that we have left, in our funds. We are being very cautious in that sense because our sense is the valuation still continues to be on the higher side. If you were just were to look at the bank, Nifty index or any larger index and just strip out the banking and financial services, which have not done for some time, the valuations across the board remains on the higher side. So selectively, we are adding in some saving related themes within the financial umbrella, be it in insurance. We have been adding some portion to the banks, again, private sector banks, where in a way we see, the crisis that is happening within the unsecured and the MFN, microfinance. Most of these banks are a bit immune to that because either they are, very small in the larger scheme of things, or they have not much exposure. And we are seeing some of the quality franchising being differentiated, mostly in the private sector bank. And also, we have kept our allocation to IT services as it is, which remains on the higher side. Given, related to the market, the IT services are still a better place, and the commentary that we are hearing now is better than what we had heard the last time, and we are seeing some of those pipeline numbers also looking good. And we have seen some of those US centric factors go away in this particular quarter. So things should look up from that perspective.
Okay, thank you. Thank you, Christy, for joining in. Get into a break. On the other side, we'll chatting with the management of Lakshmi Organic Industries to discuss their FY25 outlook.